everyone. How are we? How are you, John?
Good, Glenn, and you.
Mate, I'm alive and kicking. And I'll just say hi to Rach Kroon. Welcome to the Mortgage Broker Q&A tonight.
Thanks, Glenn.
Evening, Rachel.
Well, so let's just let's get settled, and I'll see if you can raise your hand just to make sure you can hear myself. My name's Glen James. Everyone can hear myself. Okay, awesome. We'll do the lower hands, and then Rach, can you just tell us a little bit about yourself, and we'll just see if our mic's working over there.
Certainly, I'm Rachel. I'm from Sphere Finance, and I'm a mortgage broker.
Sweet. Love that.
Cool.
John, you've had a shave tonight.
I have. Do you like it?
I do.
I'm off camping tomorrow, so I thought I'd shave down for the camp.
Right. Well, let's get into this. I'm just going to grab my iPad, and we're going to have a look at the agenda for tonight. So basically what we've got on tonight is we're going to look at some basics on just mortgage brokers in general, how they work, and we've got a handful of questions that we've set in. We've got some live polls that will be happening, and then we'll even open the chat, and if you write a question in there, we can do some upvoting, so that if you see a question that someone likes, you can upvote that.
Wow.
And then what we'll do is we'll do anything else. But let's start with, before we do that, sorry, we're just finding our feet with this. So again, I would like to begin by acknowledging the Darkinjung people, the traditional custodians of the land of which our studio sits, and we pay respect to the elders past and present, and we extend that respect to the Aboriginal and Torres Strait Islander peoples who are joining us tonight. So, shall we get into it?
Let's do this.
Okay, let's start with a poll. I'm going to launch this first poll because we're just testing.
They love the polls.
They love the poll. Where is your nearest capital city? Where are you coming in from? They're all coming through. They're all coming through. So there's a lot of people in Sydney, Melbourne, Brisbane, Vegas, Canberra, Adelaide's there, Perth, Hobart. No Darwinians tonight?
No.
So if you just joined us, welcome. We're just getting settled and starting with a bit of a poll. I'm going to end the poll. There's 81% of people voted. I'm going to end the poll, if you can find it, in 3, 2, 1. And let's have a look. Share results. So 32% of you are in Sydney, 42% are in Melbourne, 14% in Brizzy, 6% in Canberra, 2% in Adelaide, Perth, and we've got one person
Hobart.
In Hobart. And I can hear thunder outside, so if this all goes down, you'll get 100% refund of what you've paid tonight. So, let's start with a question, shall we? You ready, Rach?
Sure.
Sweet.
It's all yours, Rach.
Rachel, Shannon asks, before that, let's just go to the iPad, and these are our recommendations for tonight. You've got to get advice on your own situation. You need to know that whatever we say isn't any type of financial tax or any type of legal advice. I want you to be encouraged, and we want you to look for the one thing that you've learned. So what's the one thing you can take away tonight? So thanks for that, Nath. Okay, Shannon asks, what can I expect in a mortgage broker meeting? So what cues will you ask, and what would Shannon need to bring?
So generally, before your first formal meeting with a mortgage broker, you may have done a fact find for that broker. So they may have some initial information from you already. But generally, the first meeting with a broker will be talking about what your goals are and what your objectives are, and asking some questions about what you can do, and the broker will use that information to be able to, get ready for some recommendations when you are ready to proceed with a loan of some sort.
Sweet. Now, a quick poll.
He's hot on the polls.
Yeah, well, everyone wanted the polls.
Yeah,
so we're just going to launch one other poll. We've just launched that. So before even the first meeting, Rachel, if someone wanted to reach out, and we'll actually later in the night, we'll show some details how you can get in touch with Rachel. If somebody wanted to just have a chat with you, we've got 4 things. What is not needed when seeing a mortgage broker for the first time? So I'm talking about just an initial phone call. Your most recent tax return isn't needed. Your most recent pay slip isn't needed. A savings record or a property that you have found. So I think I'm going to end the poll in 10 seconds because we just want to illustrate something here.
So clarifying that it's not an hour-long meeting. It's just a quick 3 or 5 minutes.
Wanted to bounce a little thing off the broker and maybe book in for a formal meeting or something like that. So there we go. So I'm going to end the poll now and I'm going to show the results. So basically, if you just put your hand up if you can see the results. Sweet. So basically, at the end of tonight, if you want to have a chat with Rachel or one of her team members, you actually don't need any of this stuff just to have a phone call, because what they will do is, so for example, if someone called you, Rach, and said, hey, I'm looking to buy a property, but I'm a casual worker but I'm a sole trader, it would be different to what they would need to bring to that formal meeting.
Absolutely. And so they may not need to give any information at all, just to have a chat. And a lot of the time there's a burning question that somebody has that may be able to be answered in a 5-minute phone call that they don't need to have a meeting for or provide any information for if they just want some clarification first.
Yeah, so...
You definitely know on a case where someone rings you for the first time out of the blue and says, I've found a property, I need finance in the next 5 days.
That happened on Sunday.
Did it really?
It did.
Rach, can I get you to put that mic closer to your mouth?
Yes.
Just
Yeah.
right up there like Johnny's.
And basically, through these periods, finance timeframes have been blown out, haven't they? So that makes that even more stressful.
It does, and it may be a factor of the lender that we recommend for a client based on what their timeframes are at the moment.
Yeah. Yeah, so without naming names, ANZ's been a nightmare.
Really?
Yeah.
Okay, we weren't naming names, but there we go. So
Haven't they?
there's a
I try
question
not to
here.
name names.
There's a question here from Josh. What is, and I guess I'll get you to speak on behalf of all mortgage brokers in the world.
Absolutely.
What is your value proposition over a traditional branch lender, especially for a client with an existing bank relationship? So why would you suggest somebody go to a mortgage broker as opposed to walking into a branch?
Of course. Well, I guess having worked on both sides of the spectrum, so I've worked as a bank manager and a lender in a branch, and I've also worked in their third party or their broker channel and as a broker. So having worked on both sides, I think the fundamental difference is that there's choice. So as a broker, you can choose not just the products of one particular lender, but you've got the suite of all lenders' products. And we're governed by what's called best interest duty. So we're legally obligated to act in the client's best interest, which is something very different to the branch because they may not know what's in the client's best interest across all the different lenders, but I'm sure they would be trying to act in the client's best interest with their particular suite of products.
With the product they have,
Absolutely.
Yeah. And it's the unknown, isn't it, really? If you do go to one lender, and that seems like a pretty good product from the outset, you've got nothing to compare it to.
Oh, that's right. And working in the branch, you truly don't know if another bank has a better or more suitable product for that client.
Yeah, and I had a real life example last week. A friend of mine, Tim, hello if you're watching, he's not, but he's trying to buy another property, and it's a bigger property, it needs a renovation, it's half completed, and he said, oh, I can't do it, I called my current bank, and they said there's no chance because we're not doing it unless you fix all this up. I said to him, categorically, you need to see a broker because I know this bank, and I named the bank, right? And I said they would do it for you all day long. And basically what happened was he actually yesterday told me, oh, I just called that bank out of curiosity, right? And they would do it all day long. It was a construction type thing. But the issue that he's got is he still needs a broker because there could be even a more competitive option than just the name that I threw out there.
That's right.
Just to illustrate that his current lender wouldn't touch that type of construction loan.
Yeah. Yeah.
So let's move on to another question. Just raise your hand if you want a cheeky little poll because there was so much
We haven't had enough.
so many people want polls. So I'm going to launch another poll because we're still getting settled. We're still warming up here. Who currently owns a property? You can answer not yet. You can answer I own one that I live in. You can answer I own one investment property and I rent to live, or I own more than one property, either a home or an investment property. So again, we'll just give it another 25 seconds. And I guess it's just good to see the differences of who's in the group here tonight. Yeah, we'll give it another 20 seconds. Okay, I'm going to end the poll now. So there you go. Hang on. Share results. 74% of you do not own a property yet. 14% own one property. 7% basically rent vest. And 5% of you own more than one property. So I guess we have set this at probably more of an intermediate level tonight. So we won't be parking on a lot of the acronyms, but please feel free to reach out to Rach and her team if you want any further questions answered. Now, a curly one, Rach. Lachlan asks, is remuneration to the broker, and this is all brokers, okay? So when we're talking generally about brokers, Rachel's the spokeswoman for every broker in Australia right now. Probably not.
No
pressure.
No pressure. But when a broker is paid by the lender, does the client have to pay any additional cost, or is that factored into the rate regardless of whether they use a broker or go to a branch?
So generally speaking, the broker doesn't charge a fee. They can, but generally they don't. And the bank that the loan settles with pays that broker. Now, if you've worked in a bank, you're sitting in the ivory towers of a major bank, you've got two acquisition channels for lending, and they might be your branch network and your broker channel. So the branch network has branch staff that there's salaries and there's rents and all of those other things. And then there's the broker channel, where the broker channel is actually generally the cheapest acquisition or the cheapest way for the bank to get new business. So yes, there is a cost involved for the bank, but they're paying the broker or myself or any other broker in Australia rather than their branch staff, and the broker covers their own overheads. So there's absolutely no difference in the rate you pay as the consumer in the upfront or on the ongoing.
And that's handy, John. So if you want to just kind of speak to, like, there can be a lot of paperwork involved and toing and froing. In your experience, you've used a broker because they do all the legwork basically, and they get paid from the bank or lender to do that.
Totally. There's absolutely no downside in my mind of using a broker versus a bank. It's an absolute no-brainer. The only horror stories is when they choose an incompetent broker. Right now, we don't surround ourselves with those folk, Rachel, do we? So it's
Not anymore, John.
No. So yeah, they do the legwork. They're the middle person between lender and client. You can bounce things off them. The broker company's getting looked after for doing the work they do. Costs the client nothing. They get the best rate. They get the best finance structure for their situation, and on they go. Now, as that gets deeper from an investment point of view, when you might have 2, 3, 4 properties, they are more important than ever, right? Anyone can go out and get their first loan, but if you set it up wrong, by the time they get to the third or fourth loan, all of a sudden we might have to unpack all that and start again, which can be very costly, can't it?
It can.
Quick fire question, Maria. And again, I'll just repeat, like, these questions, if we say, like, I'm answering a question, or actually, I'll start with Lucy first. We've got a question coming up from Lucy Maria. If your name doesn't get called, it's because, one, you might have asked the same type of question. So, you know, we got over 350 questions, and obviously we can't answer them all, but we can look for the most common questions. And we know that 75% of you now haven't purchased a home yet. So we can kind of adapt the webinar as we go based on that information. So bear with us. So 20-second answer, Rachel. Lucy says, should I see a mortgage broker now if I'm saving and planning to buy a property in 3 to 5 years, or is that too keen?
If it's 3 to 5 years off, it may be too early to have an appointment with a mortgage broker, but you might still want to have a quick chat to a broker just to check if you're on the right track before you start the process.
Or it could be example, Rach, like I'm making a scenario up now. Lucy might call you and say, Rach, I live in Dubbo, for example. I want to stay here forever-ish, or my first home will be in Dubbo because I want to live in it. We know property prices are 450 grand. I'm just making up a number. Can you give me a target to aim for before it's so we're not wasting each other's time when I come back?
Absolutely.
Yeah.
And I spoke to a couple of the clients from the first home buyer webinar a few weeks ago, and a lot of them are going on to savings plans over the next 6 or 12 months. So it's never too early to have a chat.
Yeah.
I love you said that because, as you said, I think it's a great motivator to say, right, how much do I round ball need? 40 grand? Okay, I'll go off and do that and I'll see you in 2 years. More than normal, they'll come back in 12 months because they want to hit that goal sooner rather than later.
And correct me if I'm out of line, Rach, but like if anyone's like watching here tonight, hello, how are you? Wave your hand if you're watching. I just like seeing the hands come up. Yeah, they're all watching. Oh, hundreds of hands. For example, if someone was like, look, I'm probably 3 years away. Can you give me a running track? And can you, for example, just put a note in your calendar, flick me an email every 6 months just to see how you're going, just so it's more like a bit of an accountability thing?
Of course we can. And it's something that we do. And there was recently a change. So we had a lot of clients that were on savings plans for their first home. And then the new grant came out a few months ago where all of those clients received an email saying it might not be as long as you thought. So things will change and can change along that way too.
Yeah.
Especially if they're on the Glen James spending plan as well. That'll speed up things, won't it?
Maria asks, and this is an interesting one, can a mortgage broker provide advice on how to best structure a home loan? For example, interest only or P&I, principal and interest?
Yeah, we could absolutely give advice and give, I guess what the rates and what the repayments would be both ways. And generally especially if there's an element of interest only, it might be something to do with an investment property, and we might be guided by also the other advisors in their relationships. Somebody like John or their accountant might be wanting interest only for a particular reason, so we can show them how that looks both ways.
Yeah. James asks, can you request a lender for the mortgage broker to use? So how does that work, Rach?
A client can absolutely request a lender, and it happens regularly. I mean, our job is to give you all of the options, and as brokers, we will give you pros and cons of each and tell you where you qualify. And you may choose a lender that we've recommended, or you may choose a lender that is completely your own choice that before we've recommended it. We have clients come to us, they've done the research, they know they want to go with a particular bank or lender, and they're saying to us, this is where we want to go. We don't want your comparison. Please take me to this lender. And that's what we do, if that's what they want.
And I like that still because you're going to be trying to get their mortgage for them, like a dog with a bone. Like that's your officer's role, to chase up the bank, to do the legwork. So even if you go, oh, hey, Rach, I want to use X lender or X bank, your team can just execute those wishes. You would obviously say, oh, is there any reason why? Because this one over here is like a billion times better, but
that's right.
We're cool to do it. Yeah.
And it might be a reason that somebody's coming to us and they want to use a particular lender because they've seen a rate, and yet another bank's advertised rate might be more. What they don't know when they come to us is that we may be able to get better rates than what they think that they can get at that particular bank. Yeah. So there might be a time when somebody comes for a rate and then they want that bank for that rate, but we move them to a bank that might have better features and get them that same rate.
Yeah, that's awesome.
So just on that, Rach, I'm not sure if you can answer this succinctly, but are the lenders, if a client has history with a particular lender, does that generally work in their favour for a better outcome, or doesn't really matter these days?
If anything, it may not work in their favour. If you look at the systems for pricing of some of the major banks especially, it's really skewed towards new to bank customer and profitability. So when we're putting in our pricing requests, sometimes new to bank customers do get better pricing.
There you go.
Yeah, that's it's a tax sometimes on the loyal, isn't it? And that's why, just a random question, for the maybe the 15% of people watching who, or how, I don't even know, 15, 25, 30% of people watching who have a loan already, how often should they be running their eyes over the mortgage?
We personally review our clients' mortgages every 12 months.
Right.
But if I was with a branch, I would be reviewing mine myself and making sure that it was still the best in the market. It might not be the best, absolute best, sharpest rate, but that it's still very competitive for what you have.
Yeah. Yeah.
And the hassle and costs of changing it to another lender for 0.1%, probably not worth it.
No, it would have to be a substantial saving
Compelling.
to warrant. Yes.
And then what I would suggest you do a like if you had a small fixed portion or there was a cost, you would just do a break-even analysis, and the mortgage broker could certainly help with that to say, hey, if you did move over to this lender, yeah, sure, it's going to be pretty much the same, but after 12 months, you'll effectively be saving X amount a month.
Or we may be able to renegotiate with their same bank.
Right.
Sometimes people come to us with the want to refinance, and we find out that we may be able to better their rate at their existing bank.
Interesting. Let's go to another question. It's a bit of a two-barreled question here, and we'll probably spend another 10 minutes just on these basic mortgage brokery questions. Talisha asks, what should I look for when selecting a broker? There are so many out there. And Declan asks, what quality should I be looking for when engaging in a mortgage broker? What makes a mortgage broker better than others?
I think that's a really important question, and it shocks me at how many people do just get a mortgage broker out of a phone book or because they're driving past and it's their local broker. It's a really important person to you. And like a lawyer, an accountant or a financial planner, there's someone that really should be recommended. If I was meeting a broker for the first time, I'd want to know what their experience was, what they were doing before they were a broker. I'd look at their reviews and see
Google
reviews. The clients tell the story. But yeah, you would want to make sure that there's a level of experience for that broker, just like you would any other professional in your life.
And I guess it's a question you could ask is, hey, who do you work with mostly? Like some brokers might just say, oh, we only do self-employed tradespeople. And you might well, I want someone who's helping first homeowners, and because it's all about that experience. And there was another question. I don't know if I it's here. Laura asks, and I'll probably get John to answer this, can I deal with multiple mortgage brokers to make sure I get the best rate?
Oof. Headaches. I wouldn't do it personally. I think generally you've got to be comfortable with the broker that you've chosen and engaged, and just be loyal to them to see yourself through with that mortgage, in my opinion.
Yeah, and I guess the reason I wanted John to answer that is because, for example, Rach has got a team of brokers and admin people, and they're killing it. And if you called Rach and you thought, oh, I get on with Rach's team, they're great, I think you need to, from a human level, have enough faith that my gut feeling is they're not sharks, they're not trying to screw me, because I just don't know if it's fair to let someone do all the work and then you go, oh, I'm just going to go over here now, because the second part of that question, if you put a mortgage with CBA, for example, and the broker down the road did CBA, it's the same rate anyway.
The same, yeah.
That's right. And I think that you want to know that person's doing the right thing by you. But if it is somebody that's come to you, that's recommended, that's spending all of that time, I would trust those recommendations that broker's doing the right thing for you.
Yeah. Just on that too, I do actually get a bit of that. It doesn't annoy me, but it's just like, well, sometimes the grass is not always greener. Like someone will come and say, I'm using a broker at the moment, but I've noticed over here that I can get 2.54 and my broker's said 2.7 over here. Okay, well, that particular lender or broker may not have seen your whole situation to actually analyse that. That's just off-the-shelf rate. As a honeymoon period, there's usually a catch involved. By the time you've gone and jumped ship, it's all blown up in flames for them.
That's right. And it can work against a client if they were looking at multiple brokers. I know,
Yeah.
I mean, a really good broker is they're busy.
Yeah.
So they're not going to invest that time in somebody that's, shopping brokers,
No.
I guess.
Yeah. So, and again, all around Australia, like Rach and her team can help you wherever you are. We've got a panel of different brokers, and we don't let what's the saying? Foxes in the hen hound or something in the hen shed. I don't know.
That'll do.
Yeah. So there's a level of trust that we've got Rach on, and they talk with many My Millennial Money listeners after the last webinar. So we would suggest if you don't have a broker, you're more than welcome to reach out to Rach and her team to have a chat. There's a question here from Gina, and get ready, gangsters. Got another poll coming up. Yeah, that's right. I'm loving the polls. Put your hand up if you're loving the polls. Come on, everyone. Yeah. Oh, everyone loves the polls. So good.
Singapore went to the polls last week.
Did they? Gina said, to vote.
To vote,
Yeah.
yes, that's right. Yeah.
Relevance, Your Honour.
Just to keep the night just lighthearted,
And we can hear thunder. So again, if all this shuts down, good night. My broker said I could borrow 420K, but banks are saying under 380. Why is there such a big difference? And Carmen asks, is there a different assessment of the amount you can borrow going through a mortgage broker versus directly with the bank? So there's another poll here. Might have read that around the wrong way, but whatever. So the question is there a difference in assessment? There we go, everyone. So can you get more?
Spoke about that before. Didn't we?
Yeah, I mean, can you get more money from a broker as opposed to going to a bank? And it's a two-edged sword. So, and I'm going to end it in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. We'll share the results. So 70% basically said, yes, there can be. It depends whether you're a casual worker or not. That was a bit of a red herring there. Your work situation doesn't effectively change the differences between a broker and banks, but we'll forget that. But talk to us, Rach, in terms of going to CBA Direct and having CBA through a broker. Is there a different amount?
The quick answer is there should not be
Yeah.
between the broker and the bank. It would only be if there were other lenders involved. However, there can be a difference on both sides of the experience of the person that you're dealing with. So there have been times when, and I actually was with Commonwealth Bank, that one of their staff had told a particular person they could borrow this much, and it was more because there was a certain add back in their financial statements that the branch staff wasn't aware of.
So it can speak to experience.
It could speak to the experience of the person going through your file.
Can I add something to that as well?
Yeah.
Good brokers have preferred, or they can go higher up the chain because of their expertise and results. Talk to me
Absolutely.
about that a little bit. An example, I suppose.
So there was an example this morning. So I had a client on Sunday find a property that they wanted to move, but they were in that 5-day cool-off period, and they'd been told because of a certain loss in their company that they weren't able to borrow with the particular bank they wanted to. I went straight to a senior person in credit in that particular bank and had a conversation before submitting the loan, and I knew that I was going to have a good experience before I put it in.
Yeah.
So I guess it's being able to have that conversation at a credit level before putting the application in.
Yeah, and not everyone off the street can have those conversations with someone so high up the tower.
No, that's right. And so whether it be a branch or a broker, I guess those sorts of people in credit wouldn't be speaking to the newer cabs off the rack.
No, yeah.
And I guess, and just to bookend that discussion, the reason why there could be a difference is if you walked in off the street in your local shopping centre to the local credit union, they could say, like Gina's had experience, they could say yes, credit union, you can borrow 380 grand, but a broker could say, no, we could get you 420 because we've got a panel of different lenders that
Yes.
suit you more favorably.
That's right.
Yeah. So we are pro broker on this ship that we're sailing through. I'll quickly just answer Amir's question because there was a couple of these, Rach. What top 3 advice would you give someone who is starting their career as a mortgage broker? So
that's
you've
an
been a
interesting
mortgage
one.
broker for a few years.
I have.
It's been over 10 years.
I've been in the industry
Industry.
for nearly 20 years now.
Wow.
That's showing my age, but I did work in
started when
Branchland
you were
first.
15 though, didn't you?
I did, yes. And I have worked in the training and credit training of mortgage brokers, and I think it's a great industry. But if you were going to be coming out of the bank and working as a broker, my advice would be to work for an amazing broker first. I think that our industry is a great industry, and some of the more green brokers might be the ones that may have some, when people talk about having a poor experience, it may be with somebody with a little bit less experience. So my advice would be to work for someone amazing first, and then perfect your craft before you go into it.
Yeah, so plying your trade with one bank may not give you the overall skills required to be a good mortgage broker.
It definitely doesn't.
Yeah.
So I've seen in my career a lot of people coming out of maybe 10 years with a particular bank, yet there's still that transition stage where they need to be mentored for a few years before they can give amazing advice to clients.
Come out like a robot.
You only know, and I was the same. You only know one bank.
Yeah. And Maggie asks, what does an average day for a mortgage broker look like? Because we did get a couple of these questions.
Go through yours today, Rach, maybe.
It's hectic
You haven't
today.
gone home yet, have you?
I have not been home yet. I had back-to-backs today. But for me, my day started off this morning with a meeting with my team. So we workshop our deals and where they're going and why. It's really important in the current climate to make sure we get it right the first time. So my day starts with working with my team to see where everybody's putting their loans and why, making sure they're going correctly. And then I might have a client appointment with talking about people's goals and objectives, and then we might have to put a couple of applications together, and there's always something that will happen that will just blow up at the last minute and something urgent that will have to be attended to. And then I come on My Millennial Money.
There you go.
And I think that's important as well. It speaks to why we are pro broker. Like Rachel's got a team of brokers. They have their daily or weekly little powwow. If there is something curly in your case, they might just be able to bounce it off another broker in the team and it's solved.
It's so essential right now more than ever that we really do that. It was a weekly meeting before COVID, and now it is actually daily because things are changing so quickly.
Yeah.
And going back to how to choose a good mortgage broker, I think one important part of it is they've gone through, they've been in the trenches themselves. So they've bought property, they've transacted, they've got their own loans, they've experienced that, whether it be an investment or owner-occupier. They can tell a story themselves. I think that's important.
Right. And you'd be surprised at how many clients quiz you on that before they have a meeting. Clients that do come and just off the internet rather than being referred, have a list of questions about, tell me about your property portfolio. Are you an investor? They want to know that before they take your advice.
Yeah.
And that's okay.
Yeah, John and I talk to a lot of mortgage brokers, and one of the first things we ask them is, do you have property yourself? Like, have you plucked this chicken before? Hey, Amir is actually watching. I can see a hand raised there. So we wish you a long and prosperous career. So thanks for joining us tonight. Now, it would be remiss of me to move on to the next set of questions without another poll. Now, you're all a curious bunch. You want to know who's got how much Monet. And this is anonymous, everyone, so whatever you put in there, these are the amount of money that people have saved. So the first option is what's money? I'm broke. I thought that was pretty funny for me to write that. The second one, under 10K, 10 to 30K, 30 to 50K, 50 to 100K, over 100K.
Wow.
Ugh. Are you doing this?
Nath, you're doing the survey over there.
Yeah, and a thank you to Nath Robbo, who's our amazing studio guy who makes everything happen. So thanks for working back tonight, Nath. You're
Trooper.
You're a trooper. So I'm going to end the poll in 3, 2, 1. And we've had 86% of you answer that. So there you go. That's just amazing. 28% of people have 50 to 100K saved.
Wow.
That's fantastic.
That's
How good's
amazing.
that?
So that's the biggest cohort. And then we've
joined that with the home builder grant. There's 150 right there.
Yeah, and then and one of the key takeaway points that I wrote for the end of this, you may be closer to that first or second property closer than you think. And yeah, and even 13% of you have under 10K. Like, I'm so proud of everyone.
Yeah. It's good you got money.
16% of people have over 100K. So there's a good band there. That's just amazing.
Well done.
All right, let's get into some sexy time
We've got
questions.
some age groups on this because I'd be
Yeah,
interested.
I will. I'll do an age group thingy. I did ask before the webinar, but I didn't do the report.
It's amazing.
But while you answer this next question,
All right.
I'll prep another poll.
Let's do that.
So, do you want to read that first question from Anonymous?
Okay. Anonymous says, my husband and I own an investment property and the house that we currently live in. We want to know if it's better to buy our forever home next or buy another investment property which won't take as long to save for. Rachel, do you want to attack this or do you want me to?
That sounds like it's a question for you, John. That's right up your alley.
All right, well, I'll hazard a guess at this one. It's a really common one that I get probably mostly in our clarity calls, to be honest, and I try and answer as best I can in the hour. But one thing I would say to this person is, do we know where our forever home is? Because in a lot of cases, the answer is no, I've still got some living to do and I'm not sure if it's going to be I'm moving around for work or where we're going to have kids or bring the kids up and schools and those sort of things. So my thinking is if you don't know where you're going to be living, then maybe an investment property is the choice. However, if you want to buy your forever home in the next 3 to 5 years, where is that deposit coming from, right? So there's obviously plenty of variables to this, but if we can get both in the next 5 years, then knock yourself out, go and buy an investment property and then get into your forever home. Advantages of obviously talking to a mortgage broker and saying, well, which way can we skin this? Which one's going to look better from a servicing point of view, lending point of view, all those sort of things. But yeah, knowing your long-term goals in all of this is critical, what your 5 to 10 year plan might be, and then reverse engineer it back to make that next step. What would you say?
Right. And you and I have worked on a number of these sorts of scenarios together where the client may come to us with a couple of different ways that they've spoken to about how we would like to do things. And our job is really to give you all of the options. So we tend to give scenarios and here's the scenario if you did this and here's what it would look like if you did that. And then it gives you the power to make some informed decisions.
Yeah, absolutely. The only last point I would add to that would be the property cycles. So where understanding your forever location, if you know it, what's it done in the last 5 to 10 years? And I'd probably talk to maybe Sydney and Melbourne housing markets right now where the major growth has been the last 4 to 5 years, right? So are we going to see that in the next 4 to 5 as well? That's what we need to ask ourselves.
Curly one here from Jai. This is actually, it's going to be a wild one. Thanks for emailing us, Jai. How do vendors view student accommodation? If you go down this road, are lenders going to want to see 12 to 24 months of data before taking cash flow generated into considerations? Or can you purchase, renovate the house and lease out rooms? There's a paragraph there. But so if, we live near a campus of Newcastle University. If I wanted to buy a home with 8 rooms and it's not a traditional, like they're still looking at what's it going to rent for.
Yeah, it sounds something like that. It sounds like it may have a commercial flavour to it. So if it was depending on what the contract looked like and what the zoning of that particular property was and what the current usage is, some banks may say, well, that's in our commercial department, and it doesn't mean that you can't borrow for it. It just means it may be in a different section of the bank. We've done some student accommodation lending under a residential structure, but it wasn't as specialised in the way of the security and the zoning for that property. So it is very dependent on the property and what the zoning is before the banks will decide what way they're going to lend on that.
So in some cases, like if, for instance, there was 6 separate water meters and everything was divided and you could clearly see there was 6 rents coming in at various times, would that be considered commercial lending and may you need a higher deposit in some examples?
Depending on the bank, generally speaking, it would be seen as a commercial flavour, and you may be capped at a certain percentage of lend based depending on the different bank.
Yeah.
With something so specialised, we would tend to send scenarios out to a bank with a number of different banks with this is actually the property. And a lot of the credit managers want to have a look at it on Google before they'll answer that question.
Right. Okay, so that's an interesting point. So Jai, or anyone who's got something that's a little bit curly, speak to your broker.
Absolutely.
They will build a one-pager and send out to 5 different lenders and say who wants to bite at this apple.
And it can vary greatly. We had one very recently that was, 4 units on one title, and a number of banks said commercial, and one came back and said, actually, no, we'll do that under a completely residential structure.
Oh.
And the goal there for everyone playing at home, usually with commercial lending, you might need a higher deposit and you might have to pay a higher interest rate.
Definitely.
So I'm basically a mortgage broker.
Come over.
Well,
I've got a seat.
You're
I've
in
got
the
a
wrong
desk.
seat.
Oh.
Yeah, she's hiring.
All right.
Yeah.
So you wanted it, everyone, just so everyone can see. We've launched a new poll. This is anonymous. Actually, this one isn't, but whatever. We're not doing anything with it. How old are you? We don't have any under 18. Oh, we've got one under 18. Thank you for watching.
There you go.
That is
Very
so
mature way
good
to spend your
because
time.
Yeah.
for you who are under 18, the information and the goal that you are learning, you will have a long and prosperous financial life.
That's right. Get off my laptop, Max. Go to bed.
Yeah, okay.
What do
So
we got?
the biggest band is 26 to 30 at 49%, 19 to 25 at 28%. I'm going to end the poll now and just share the results. Everyone can see there. So there's a bit of a bell curve.
51 to 60s, is that right?
Yeah,
Yeah, well
2%.
That's amazing.
So that's good.
Hi, Dad.
He's watching his daughter.
Yeah, love that. Okay, there's another question. Monica asks, when is it better to have interest only or P&I? So if Monica was here with us, and Monica is, hi Monica.
Hi, Monica.
Monica's just said to Johnny boy,
Yeah.
like, when is it better for me to do interest only?
Yeah, well, the idea of owning property is it goes up in value and we remove the debt associated so that we've got higher cash flow for the long term. But in the short term, you've got to play this juggling act of trying to maybe grow your portfolio versus paying down some debt as well. So I think your owner-occupied home, you always want to be principal and interest. You have an offset account and pour all your cash into that. If you've got investment properties, generally speaking, I go to interest only just because the running costs on it are less, and then I pour the remainder into my home mortgage, right? But if you've got no mortgage, as in no principal place of residence mortgage or no principal place of residence at all, then you may consider a principal and interest loan on your investment properties, but just be wary of what the differences are because there's probably $7,000 to $8,000, generally speaking, more that you would be outlaying for that particular property per year across a standard loan. So that can add up if you've got 2 or 3 properties. But yeah, that's a long-winded response.
Yeah, and excuse me, and I would add to that on a strategy point of view. You know, there's a big bell curve of people in 19 to 25. You know, money's cheap at the moment. If you're kind of trying to get your career started and it might work out to be cheaper to live in a house that you own on interest only as opposed to P&I, just temporarily till you really start and get your career off the ground, lifestyle settled, I don't think there's any harm in investigating that option. Talk to us at the moment, Rach, about lenders and rates between the two.
Yeah, there is a variance between principal and interest only. Due to the Royal Commission that happened last year, there was a really big emphasis on interest only, and exactly what you were talking about then. People were thinking maybe it's better to have interest only on my owner occupied, and they're trying to discourage that.
Right.
So they're actually loading the rate for interest only, especially interest only on owner occupied. So I've done some comparisons recently where a client that may have wanted interest only may have changed their mind when they actually saw what the rate difference was between the two.
Yeah, right. So APRA's obviously tapped the banks on the shoulder and said, you need to make some incentive.
Yes.
But it's weird, like my properties, they're all principal and interest, regardless of investment, regardless of my home.
Well, you've got to put your cash somewhere, don't you, I suppose?
Yeah, I do, John. I so do. No, but for me, it was that forced savings. Like I am paying down loan and building equity.
Yeah. Yeah, and I actually met with a client today around this. One of their investment properties was P&I, as well as their home mortgage P&I. And they said, oh, this property's costing me so much to hold. Well, I said, yeah, but you're paying down 6, 7, 8 grand of principal each year. So it's not costing you money. It's just that you're paying down the loan.
Yeah.
But could that 6 or 7 go towards paying down your home mortgage quicker because your home mortgage is not tax deductible? That's the question we've got to have, and that's where your accountant comes into it.
Yeah, and I guess, and this is why everything's so personal. Like for me, it's all just P&I because like I don't need to pay down my home because we're sitting in my garage at the moment. I don't plan to live in this house forever. So for me, it's all an investment property. So, but anyway, that's it's all case dependent. Let's have a look here. Simone asks, tips or an explanation of how to use equity in your first property to purchase a second property. So if someone owns the property, they will just make a number up. It's worth $500,000, and we'll talk to somebody here who's 39 years old, like, because there's 22% of people. Someone might be 39, they own a home worth $500,000, they've had their head down, and they've got a $300,000 mortgage, so there's $200,000 worth of equity. How could they structure it to set up another property? Don't all jump in at once.
All right, so do you want me to quickly give a quick example on that 500K property?
Please, John.
So we want to say, right, value of the property times by 80% minus the debt, right? So if you got 500K times 80%, when I went to school, that was 400, minus your debt of 300 gives you $100,000 of usable equity, right? So if you're servicing, as in your income and your assets and liabilities all shape up pretty well and you get a green light from the bank, potentially you can take that 100 and that can be used as a deposit for that second property, that investment property, or whatever you want to do with it.
Yeah, and sometimes that person may go to their bank and their bank may encourage them to cross those securities so they can utilise that to buy the next property, where sometimes... would you like me to draw a picture?
Yeah, let's draw a picture.
But sometimes that may not always be the best way. So let's use that same example that you were talking about. What was the house worth? 500?
500.
And they had a mortgage of 300.
Yeah.
And rather than cross these properties, and let's say they're buying an investment property of 300 and they need to borrow 330, the traditional way at the bank is to say, well, we've already got this security, let's just lock it down with this one, and that way you can use the equity in here.
You might have to just draw so people can see.
Oh, sorry, I'm pointing like you can see it. Did
Actually,
you like that?
I
Hit that there. That's a laser pointer. So now you can do laser.
Oh, this is a little high tech for me.
So there. So
Just bear with me.
So start your sermon again.
The 100,000 equity that you've got available in here, they'll basically cross that. Where that's not always the best way, because this value of property might go up and this might go down. And
Got to use the laser.
oh, sorry.
Yeah, this one might
This one might go up and this one might go down, and these are locked in together.
Yeah.
Or you might want to sell this one down the track and you're forced to pay this debt down, which is which is your investment debt. How do I rub this one out?
Yeah, that'll do. Oh, she's a pro.
Yeah, so just before you've just rubbed out that 330, just explain to the viewers as to why that's 330.
Because you would, it actually would more be 315, but
Yeah.
you borrow 100% plus the costs, like
so-
stamp duty.
Yeah, stamp duty. Yeah.
Yeah.
Cool.
So if just say you came into my office, we'd give you the options both ways, but generally people would go, well, let's get this $100,000 that we have that usable equity, as John said, secured against this house,
Yep.
and then do a loan for 80% against this one.
Over here and keep it separate.
Not crossing the securities. This may be with different banks, but it just protects and locks the equity in your own home against, I guess, the fear of this property going up or down in value, if that makes sense.
Yeah.
Right. Yeah.
Yeah. Yeah. Well explained, Rach. And I think you and I early days had some robust conversations.
We
around
did.
this, didn't we? And I think I've changed my tune a little bit because the lending conditions have changed a little bit as well, which has sort of swayed me a little bit over to your side of the fence.
John was a big fan of changing the banks between these two. Yet I would go to a bank that would lock these two securities apart because I like one set of fees where I guess the banks have that security. John likes the different banks, and there's pros and cons both ways. But as long as you're using a bank that absolutely locks these securities
Yes.
separately,
That's the critical
you
part.
can just have
Yeah.
one set of fees.
I grab that off you.
My beautiful drawing.
So I just want to, so I can understand just from another angle. Let's just go here.
I feel I might get
Okay.
teased for that drawing later.
No, that's fine. So basically, what you're saying, if there was a property here, it was worth what do we say, 600 or 500? 500, and there was 300K worth of equity. What John was having a fight with Rachel about was
We call it robust conversation.
Robust.
set up another mortgage on this property of say 100 grand.
100K.
100K. So there's another mortgage here. And then, so if this was with CBA and you wanted to buy a new property, Johnny's saying, call ING, for example, and tell them we've got a 100K deposit to put into that property there.
Yes.
Is that what you were saying, John?
Yeah, so you'd borrow, if that property here, the second one was worth 400,000, for example.
Yep.
You borrow the 300K from ING.
Yep.
Now, what swayed me a little bit since having those beautiful, robust conversations is what banks started to do was put a, what do you call it?
A buffer.
Rach? A buffer on you going to another lender.
Right.
So it made it less attractive for you to jump ship and go to ING. So you're actually better off in a lot of cases staying with CBA. But as Rach said, making sure that the securities are separate from each other and
Yes.
not tied.
So
It's really important to have that.
So
checked.
basically what you're saying, Rach, instead of sending one application that lists both properties, we're actually sending two applications
Yes.
to the one lender.
Double the work for me and my team.
Yeah.
Much better for you in the long run.
Yeah.
That's right.
So the properties are still separate, but with the same lender.
Yes.
Yeah.
Yeah, and the critical part in the contract, a bit of a nerd coming out of me now, is the all monies clause, isn't it?
That's right.
So you've got to. No one checks their loan contracts. Well, I don't anyway.
I do.
But I know that the all monies clause is what trips people up.
And what's that clause?
Basically saying, I used to know it off by heart. It was basically saying they've got access to any part of your money at any time, no matter whether you think they need it or not.
Well, that was what happened with, was it when the COVID thing happened, ME Bank, they automatically sucked up the redraw facility.
That actually got a little blown out of proportion.
Did it? Okay.
Yeah, they were some really old grandfather loans.
Right.
Grandfathered loans.
Yes.
And it was redraw that it was actually to do with more with the Royal Commission, and people were having loans that were open that probably weren't getting paid down at the rate they should have been.
Right.
So it came out at a poor time
Right.
with
Sure.
COVID.
Good timing. Yeah. But for the listeners, a lot of them haven't got their first property. But to understand this stuff is really critical because you're thinking about the next property when you buy this one here. I think like you've always got that second property in mind, even if you think it's 3 to 5 years away.
Okay, question. If I can get you to go to the iPad, there's a question here from Matt. Would you recommend using equity or cash to fund renovating my principal place of residence? The renovation will cost 50 grand. So if I'm just going to draw here, the house is worth 500K. Matt's got 50K in cash. And we'll just assume that there is a 300K loan on the property. And he wants to put in an extension, which is this is the extension here. I'm such a good drawer. So what are the...
It's a deck.
It's a deck.
Yeah.
There we go. Can you explain, Rach, maybe the options with the iPad of... Or is it a question for John? Like...
While you're thinking about it, Rach, well, if I was coaching this person, I would say, how quickly can you save the 50K in cash? Because ultimately, the 50K that you're borrowing to do renovations on your own home, none of it's tax deductible. It's just adding to your bad debt. It's adding to the time that you're going to take to pay down this loan. If the answer was 5 years and I need the reno done now because our family's growing, then maybe you bite the bullet and take the 50K of equity and use it. But yeah, it really depends on your situation, doesn't it?
Yeah, and it's really up to the client choice. If their prerogative is that they want to get that work done and they want it now, you can absolutely increase your home loan to be able to have that done.
If he had the cash, do you get a mortgage and just set up an offset account and put the cash in there and it's a net type of thing, or do you just...
Yeah. If he's saying he had the 50K of cash, then I'd be getting the 50K of equity and putting the 50K against it
as an offset account.
Yeah, I would be inclined to do this scenario both ways for the client and show them the pros and cons of repayment.
Yeah.
And a lot of people do like to have cash available to them. And depending on their profile, if they're a great saver and they've got money saved, they might be best to still borrow it and put it in the offset because they know they're not going to use it. But if there's a client that really doesn't keep savings in an account well, I'd be more inclined to say that maybe you could consider using your cash, because the last thing you want to do is spend
Wipe
that
yourself
money
out.
and increase your debt or your bad debt, as you were saying.
Yeah, the emotions of the client.
There's a couple of questions here. Let's have a chat now about construction loans. Jessica says, do you need 20% deposit for a land and construction loan, or is 10% still common? 10% still common? Did I talk right? So what would you be saying if you had a client, John, who wanted a clarity call and they said, we want to do a house and land construction. Do I need 10%?
We're not assuming any government grants or anything for the moment. We're just saying raw deposit. Well, they need minimum 10%, generally speaking, don't they? Anyway, but you would ideally want 10% land deposit, 10% build deposit to get it, to make it cleaner.
Yeah, you can do up to 95% still. However, you've got to keep in mind that there is that mortgage insurance cost. So the real deposit tends to be 8 or 9%, even though you can do a 95% loan. But construction doesn't change the rules. You can still borrow the maximum doing a construction loan. But I think that you need to be careful as a buyer, knowing that the bank will only fund what's in that contract. So some people think that they're able to do sort of out of contract things and get an architect. If you're doing a high LVR, so a higher 90 or 95% land to construct loan, it really must be all in the fixed price contract.
There's an anonymous here that's been upvoted, and would you recommend buying an existing property or building a new as a first home buyer? Are there any differences in getting a loan for either option? So as a first home buyer, are there any showstoppers for buying pre-existing or brand new house and land? Or is it kind of more the speed and the process?
You can't deny those grants at the moment.
I mean, it's free money. You've got to get free money. It's free money.
And the other, so you've got buying that first home or building that first home, you got basically no stamp. you've got 25K home builder, and in regional, some cases you've got 20K, but worst case 10K. So I've got a client at the moment who's bought in for 505 or something, has put 25 grand down, and they're getting a 45K rebate. So
Fantastic.
like they're actually making money from this deal. It's outrageous. So it's not like you've obviously got to look at your strategy, but it's a pretty attractive time. I haven't seen it in my time of investing.
Oh, nor have I.
Katie asks, what's the actual explanation of the whole start of a mortgage for first home builder? So if someone wanted to go up the road and there was a new housing estate and they said, we want to buy a brand new property and build, when they come to you, Rach, and they say, yep, we think we've found our builder and they're going to do the land and the house, what's the process from lending?
The process would generally be to get a pre-approval first. So you want a pre-approval for the land and the build amount. That way you know what you can spend and what you're comfortable with before you go and start shopping. So you know how much you're going to be spending on your land and how much you're spending on the build. It's really important to talk to a builder that you are about what you're borrowing and explain to them that you do want a fixed price contract, because sometimes you do see those builds for, advertised for 150,000, but then when you actually when you actually know what it costs to finish it with everything, it might be more like 300,000. So I guess the process is to get your pre-approval, know what you can buy or borrow up to and what you're comfortable with. And that way when you're talking to builders, you're giving them a guide of what you can actually afford, and you're not looking at things that you can't afford.
Yeah.
And from there, you get a pre-approval, and then you would exchange on generally the land when you find a suitable block with a pre-approval for the build, and then you get a formal approval for the build once the plans and all of those things have been put in.
So you've really got to go to a licensed builder who can commit to a contract,
of course,
and the bank will pay them in stages.
It's called a progress draw loan.
Right.
So what will happen is the land will settle generally first, and then you start to pay, traditionally it's interest only, just on the land. And then there might be between 5 and 10 progress draws. So it might go, your land settles and you'll put all of your money in at that stage, and then the bank will fund in increments. So you'll start to pay interest only on 300,000, then maybe 350,000, and then 400,000 until it's complete. And then when it's completed, generally that's when you're moving in or renting it out, and then it will change to a principal and interest loan, and you start making the full repayments. So it goes up in increments.
Are there any options so when you move in you can elect that it stays interest only, or do they actually make it settle the final amount on principal and interest?
Unless we state otherwise, it will change on completion to principal and interest.
Yep.
Not saying that you can't leave it interest only, but generally, if you're living in it, it would convert to principal and interest.
Yeah, and just on that home builder stuff, if anyone's listening, thinking about it at the moment, you've really got to get your ducks in a row with that pre-approval, but then that 3-month window of signing build contract to builder starting the build is very tight. So you've actually got to get it right. Otherwise, it's going to blow out pretty quickly.
There's a couple of questions here. Emily asks, has COVID impacted loans at all? Is it harder to get a loan? And Glenn asks, worth applying for a mortgage whilst on reduced hours and job seeker? What are the lenders saying?
So this is huge, and this is the reason we're having daily meetings at the moment instead of weekly. They're all different. So there are still banks out there that will take the JobKeeper program. A lot of them have different requirements around it. But yes, it's making our job a little bit more complicated. But the answer is yes, you can still borrow. It's making it more difficult to, maybe to choose the right bank. But once you've found it, you can still get money. It's not impossible to borrow under those circumstances.
Yeah, interesting. Hannah asks, Hannah, she's a friend of the show.
I do know Hannah. Lovely lady.
Yep, she's been on the podcast a couple of times.
Jazz.
That's all I'll say. Should I focus on paying down my own occupied property or use the money for deposit on an investment? She has an extra 50K. So regardless of this, whoever it is, if someone had 50K laying around, one, can I have some? But two, would you say put it towards an investment property or pay down the principal place? Or is it come down to lending structure and it all comes out in the wash anyway?
Here's a little bit of gold while you're thinking yours. Question, the statement, Rach. Both.
Both. Okay, keep talking.
Pay down the mortgage and draw that 50K back out as tax deductible debt to go and buy your investment property.
Agreed.
Done.
So it comes down to strategy, someone with a brain to do the most appropriate thing for you.
Yep, basically.
Yeah.
Because, and that's again just harping on about this strategic mortgage broker is a lot of, well, banks aren't thinking strategically for the client.
No.
It's like you go to the doctor because you've got a sore head, right? You go to the dentist because you got a sore tooth. You go to the bank to get a loan. They don't ask too many questions. They just give you a loan. Sometimes you don't know what you don't know.
There's a question here. There was a question here. Sophie asks, is it possible to get a loan on a casual income? She's been in her row for 2 years with a somewhat consistent income.
Of course, definitely.
Okay.
Although sometimes, especially after COVID, a few of the lenders, especially some of the small lenders, just stopped lending to casuals altogether.
Right.
Or would only use 50% or 60% of casual income. So for those people in particular, it's important to go to a broker and make sure that you know what you can do and what you can borrow across the different banks. But you absolutely can still borrow on casual income.
Right. And speaking of that, let's do one final poll for the night. You can see what everybody else is earning. What's your income? Nil, or study or government benefits under 50K, 50 to 70, 70 to 100, 150, over 150. Have we already answered this one? No, we did savings. Not income.
Not income.
Yeah. We'll let it go for another 10 or 12 seconds. 73% of you have voted. And while that's happening, let's just ask, are there any certain occupations that can attract a waived LMI without the need for a 20% deposit?
Well, this is one of my favourites.
Ooh.
And there absolutely is, and it varies a lot between banks. And some of them are really different, ones that you wouldn't expect. So the usuals are doctors, lawyers,
Physios.
Accountants,
psychiatrists, but sometimes not psychologists. Like banks have really like different sports people.
When Westpac
celebrities,
taken that off the table,
changed it. Yeah,
no good.
Yeah, lowered it slightly. But so you can essentially, with different banks, if you're in a certain profession, go up to 90% without having to pay lender's mortgage insurance. And I guess that takes us back to that, what we're talking about when you asked about branch and broker and who's looking after the client. If I was working at the branch still and I didn't know that a particular bank that I didn't work for offered no mortgage insurance, I would really think that I was doing the best thing by the client, offering them that product at 85% with $10,000 mortgage insurance, not knowing that somebody else wouldn't charge them that.
Yeah,
so it would, if you've got the different industries, there's definitely different rules.
Yeah. So if you look at the poll results, the lion's share, or 38%, between 70 and 100K, and that's pretty consistent with what we've surveyed the My Millennial Money community. The average income of M3 is 75 and the median is 70.
Yeah, that's bang on there, eh?
Yeah. 24% of you 100 to 150, 8% under 50K, and 23% 50 to 70K. So there you go, everyone.
Just while we're talking about mortgage insurance, can I tell you something exciting that happened today? One of the banks have come out today and announced that they're going to do no mortgage insurance for up to 85% for first home buyers.
I didn't hear that.
I know, it's really exciting.
Yeah, I did see that as well. That's so that's a game changer.
Absolutely.
Because usually, and it was a top 4 bank, so they watch this space, first home buyers, and this is why it's like a lot of you have money saved, a lot of you have a good income. a lot of you, I really think it's closer for you to get into a home sooner than what you think.
Yes.
Well, I always say,
What do you always say?
finance and risk profile are the top two things that stop people from getting in. But the risk profile is probably the big one, because people don't realise how close they are. If they really want something, eliminate the fears and make it happen.
There's an anonymous question here in the Q&A that's been upvoted. Is it better to get a broker who's close to the area that you're interested in buying, or a property, or it doesn't matter where the broker's located?
No.
It doesn't matter where the broker's located. I get referred to people all over the country, and some of them aren't even in the country.
Well, you had a listener from our last webinar in South Australia that you've been talking with. So
That's nearly not. No, I used to live there.
Yeah.
It does make it easier if they're on the same time zone, but not imperative.
No, and especially if you're specialising in a type of client, I've if you get into a certain industry, so I've done a lot of loans for a particular profession, and they tend to refer you to their colleagues, and they might be all over the country. But if you're very good at a particular profession, you'll get referred based on that expertise, and it's got nothing to do with geographics.
Yeah.
There's a question here again in the Q&A. If I have a solid deposit saved, but I have withdrawn from my super during COVID, will this affect me getting a loan? If so, for how long? So I think this speaks to the financial hardship. And can you speak to that, Rach?
I can. So a couple of the banks have come out and said that if you have withdrawn from your super, that they will not be lending in the short term, especially if the deposit has come from withdrawal of super. And that's just to keep it in the vein of, well, if you're withdrawing from your super because of hardship, then technically if you're in hardship, maybe we shouldn't be giving you a home loan in the next few months. Yeah. Not to say that you can't borrow down the track.
Yeah.
And that's not all lenders.
And would that be like a 3-month or 6-month thing, do you think?
They haven't given a time frame yet. Yeah. It's really new. Yeah. But it's definitely case by case.
Laura asks, can a guarantee be used for 100% of a first property deposit? Is there a limit?
It can be 100% plus costs.
Really?
So I recently did one for a very good friend of mine who bought an investment property. So there was stamp duty involved, and her parents guaranteed her for 100% plus the 5% costs.
Well done.
Wow. And we've got 10 minutes. I've turned the chat on, so maybe if you want to just chat, just try it, whatever. Don't know if it actually is working or not. A question here. Yeah, this is a good one from Ashley. How much does having a small child really affect your borrowing power? They've got one newborn, and then Jess asks, how does having previously sold 2 homes and now having 3 children work on credit assessment? So there's a bit there, but just talk about dependence, financial dependence.
So financial dependence will obviously affect your living expenses, but it doesn't mean that it has to hinder your borrowing. We had an application in the office the other day where the clients had married from second marriages, and they had 7 children between them, and obviously 7 dependents, but it didn't stop them borrowing. So it's your income minus your living expenses, which that talks to how many dependents and other loans that you've got, and then that will allow how much you can actually borrow.
Yeah, so for the listeners, how do they work out, given the age of the kids as well? Like if you've got under 5, under 10, one that's 15, the 15-year-old might cost you more than the 5-year-old.
That's right. So most lenders don't have it's just it's by the number of dependents. But when we're doing our assessment, you might have 3 children in private school. Obviously, we have to take that into account with your borrowing. But there's no out-of-line expenses, it would go on how many dependents you have, not necessarily the ages.
Yeah, cool.
So this might be a dumb question or might be late. Do they care about pets and dogs and cats? Or is that just come under expenses? Can I tell you a funny
story? It comes under expenses, but we run this thing called bank statements. Right. So if you were wanting an appointment with me and you would go and do our fact find, you'd also put a link in that's called bank statements. Yep. And it would allow me to get access to some of your bank data, which will show what you're spending your money on. And I did a trial on myself, and it said that I spend $400 a month on pets.
Wow.
So if I was doing my own living expenses, I would have to actually say, well, I spend $400 a month on pets. But it
Wow.
actually cuts it up for you and what you're spending. It's
Yeah.
really interesting.
So can you pay cash for that stuff instead so it doesn't appear on your bank statement? Or
But on that, if we were putting up a loan application, let's say somebody had a lot of expenses and that was on their bank statements, they may have been off travelling. It doesn't mean I have to take that into account for going on. I just have to make comment on it.
Yeah.
So I might say, look, these clients have just been doing Euro, they've just got married, look at all their expenses. However, I'm preempting that their expenses moving forward based on our budget's going to be this. So just because you have had a huge spending 6 months doesn't mean that we have to use that for your living expenses.
And just talk about buy now, pay later stuff on bank statements. Banks putting Afterpay, Zip Pay towards the lending profile.
We definitely have to take that into account. And if you were doing a 95% lend, highly mortgage insured, and you had 2 credit cards, 2 personal loans and an Afterpay and a Zip Pay, I'd say, hey, let's knock out that Afterpay and Zip Pay before we put your application in for credit score.
Yep.
But if you were borrowing 60%, we wouldn't even have a conversation about it.
When if banks saw that there was $100 every 2 days being taken out at the RSL ATM, would they think gambling or question stuff like that?
I would make comment on it.
Yeah.
And it might be that there might be a completely valid reason for that. Or but you would have to make a comment about what that transaction is.
Yeah.
And
chicken
if it was
schnitzel's nice there.
Schnitty night on Wednesdays. Thanks, Rach.
Sport bet.
Small bet, yeah. There was a question from Laura, and I accidentally deleted it before by accident. Is there an update from the government on the 25K grant around using that as a deposit? ANZ were kind of
The home builder.
the home builder, yeah.
We've had applications approved where we're using that as part of the deposit.
Okay, cool.
Yeah, so because early days they were talking about it, giving it to you at base stage, weren't they?
Yes, and I'm still not sure when these clients are going to get it because we haven't had any settle, but we've had the approval knowing that it's going to be part of the funds to complete.
Yeah, so that's different, isn't it, to what Laura's saying in relation to the
Hang on,
deposit?
I'll try and bring it up.
like I've got a build that's 250,000. I haven't got any money for it, but I'll use the 25K from the government as my 25K deposit.
Yeah.
Yeah.
Hang on.
Do you know what I'm saying?
So is that not for a build though, or for renovations?
Yeah, no, it's for a build. But so what you're essentially saying is no money down that's their deposit. They're able to use the deposit as a deposit.
That would be part of their funds to complete, but it would be rare that the 25,000 would be the entire amount because there's going to be land and a build.
Yeah, but
I've never seen land and a build for 250.
no, that's right. But like, let's just say hypothetically they've settled on the land, and they're saying, right, we want to go and build on this thing. We haven't got any money. Can we use the 25K?
They've already got equity in their land.
Yeah.
Then essentially they should be able to do
Yeah,
that.
and if they haven't got equity, they'd still need their own funds.
They would, yes.
Yeah.
Yeah, because Laura says, waiting for this clarity to proceed with the house and land package, we hope to avoid LMI for first home buyers regional grant in Vic with 20 grand and the 25K. So, yeah, we can't really get into the personal details, but
Please please feel free to reach
Hit us
out
up,
with the
Laura.
scenario and I'll definitely come back to you and let you know exactly for your
oh,
circumstance.
hang on. She said, yeah, wanting to use 25K new build plus 20K first home buyers as part of the 20% deposit. But anyway, if you don't have a broker, Laura, or you haven't chatted,
But if with the grants and your deposit, it's 80%, yes, you will not be paying mortgage insurance.
No.
yeah, because it comes at settlement, isn't it?
That's right.
Yep.
Yeah.
Anonymous asked, is it too risky to rely solely on equity in my investment property as a form of my deposit to buy my first home? Pros and cons.
First
So
owner
they're a
occupied-
rent vestor. at
First
the
owner
moment.
occupied home.
Yes.
Yeah.
So they're a rent vestor and they might have 100 grand of equity in the investment property.
Yep.
And they want to buy a home to live in.
Yeah.
How do we slice that dice? I'm making sayings up, but whatever.
So they want to buy. I need to read that again. Is it too risky to rely solely on equity in my investment property as a form of
I
deposit?
don't think that would be risky at
for my
all.
first home.
Because if
No.
you did vice versa, it's the same risk.
Absolutely.
Well, there is a different risk in what's tax deductible in terms of their after-tax position, but essentially,
And
if they want to buy their own home,
Yeah, this talks to strategy, guys.
I think what's the alternative? Like, if you want to buy your own home now, what's the alternative if you're not using equity? You basically got to save cash, don't you? So that could be a 5 to 10 year story to get that done. So there might not be too many options there unless you sell your investment property, which is usually cutting off your nose to spite your face.
Before we finish up tonight, any final comments, Rach, that you want to tell everybody?
No, but I would really like to make the point that please just reach out if you'd like a couple of minutes chat before you
Pull the trigger on anything.
before you pull the trigger on anything, because a couple of minutes might save a little bit of time down the track.
Yeah. If I can get you to go to the iPad, Nath, I kind of looking through, and I guess, yes, this is a prepared slide, but just looking through all the questions tonight, I honestly, don't think it is as overwhelming as it may seem like for people, because once you chat with John, chat with Rach and her team, and this is very important. Don't listen to people who do not know your personal situation. So I'm talking about negative friends and family who will just always default to saying, oh, you can't do it, you can't do it, you can't do it. And that's why the value of John's clarity call.
Yeah,
will
they might
come
not
in.
even be negative. They might just have your best interests at heart,
Sorry, I'll
but
delete
which
that.
is the wrong advice.
Yeah.
Like,
Yeah.
it's just they're too involved in the process.
Yeah.
Yeah.
Yeah. So I really want to encourage you to chat with John and chat with Rach and her team, because everybody's situation is so different. A raise of hands if you've enjoyed tonight. If it's been... We've all raised our hands here. So thank you so much for joining. I'll get you to go back to the slides. In 2 weeks, we're going to come back here and talk about advanced property strategies. Now, we might even, this is probably more set almost to more advanced. So, but we would say you're totally welcome because it's all information. Next week, I'm going to be here joined by Laura from Lala Social Club. For those who are in small business, we're going to talk about how to get your ideal client. If you want to start a business one day, you're going to learn about that. We're just going to chat all about small business. Then the next fortnight, we'll be back here with Rach. And then following up in August, we're going to do a webinar on personal insurance. So your life, TBD, trauma, income protection. And then take a photo of this slide here, everybody. If you want to reach out to Rachel and her team, you can do so. You go to spherefinance.com.au/M3 and she will certainly help and put you in touch with the right person. So
Totally.
thank you so much, Rachel. And
You're Raj.
Thanks for having me.
yeah, thanks for coming back. Weirdly, everyone, such a small world. Rachel literally lives around the corner.
And I drove
And
across
she-
the road.
She drove. I wasn't going to say that.
I was coming straight from the office though.
You were. So thank you so much. There will be a replay tomorrow on the podcast, My Millennial Money. There's an episode John and I recorded on Friday.
Yes.
I edited it up yesterday on Sunday. Got the old mouse up myself and got editing. And that's how to manage your money in your 40s.
Oh.
And we weren't going to do this episode, but we decided to because a lot of you still wanted it, even though there's a variety of people who are under 40. But I actually think it's maybe one of the best episodes we've done in a long, long time.
I think ever.
Wow. It's a bit rich, but it is a really good episode,
Yeah.
and you will learn a lot about that.
Get your hands on it.
So send it to your older siblings, send it to your parents, and anything else. Did we miss anything else? what is Rachel's business? Jack asks. Well,
Jackass.
Jack asked. No, Jack asked.
No, it's Sphere.
It's Sphere. Go back to the iPad. Sphere Finance.
Yeah. You like that, Nath?
And thank you to Nath Robbo, our studio champion, for
Thank you, Nath.
working back. You know, we love a bit of time in lieu. And everyone,
Keep safe.
love you. I was actually can we just wait 1 second before? I mean, you're welcome to leave, everyone. It's officially over, all right? We're going to send out a survey tomorrow, just any feedback about tonight, because we always want to make these webinars better. One last question. How much does HEX impact how much you can borrow, HEX or help debt?
It's just like any other liability. Put it onto your into your assets and liabilities. So you can definitely borrow with HEX or help rather.
Yep.
But it just gets factored into your overall situation.
Yeah, sweet. Yep. So, and thank you to a few of you who have written thank you. I don't know how to end these things. What do? Do we just say goodbye?
Have a good evening.
Have a good evening.
Yeah.
You know what I did after last webinar? Went and watched some Law and Order because I bought some on iTunes, like season 18. I'm just plowing through that.
Good on you.
I'm going to go and watch some Law and Order.
Cool.
In fact, I'm going to drive down to the 7-Eleven and get a Magnum ice cream and then come back home and watch some Law and Order.
I'm going camping.
All right, everyone. Thanks so much for watching. We will see you soon. Thanks, Rach. Thanks, John.
Thanks, Glenn. Thanks, Ray.
Bye-bye.
Bye.